All right, guys, so now that we've kind of discussed that you want to map off all those larger time frame support and resistances, what we're going to do is, okay, of course, we do that. So once we have mapped out those time frames, on any stock that we're looking at for the day, of course, we want to say we have mapped off this 4-hour trend here at 310. So if we do that, and we're starting the day and we realize that that level is just so far outside of the normal trading trend for the day that we're probably not going to reach it, then we're going to decide to just trade off of the intraday levels, okay? But in the event we mapped off that larger time frame level, and let's say it lined up like this, then we would trade off the larger time frame, or we would trust the larger time frame trend on the intraday chart over the intraday levels. Okay, so if the larger time frame resistance or support is inside the intraday channel for the day, we're going to trade off that level first. If in the event that those levels are way outside the normal trading channel for the day, we're then not going to anticipate the market's going to move there, because markets statistically are not supposed to break outside this trend. There will come a time where the market does break outside that trend, and if it does, that most likely means that on the larger perspective, the trend is changing and that it's strong enough to break it outside that normal trading trend. And if that does happen, there's a good chance you'll see the markets move to one of these levels, right? And when they get there, they will reject, okay, or bounce. So if in the event the market ever breaks outside of its normal intraday trading channel, there's a good chance it will try to go to that next most recent big, large time frame trending support or resistance, okay? If it doesn't, then again, you're trading off these levels, okay? So it'll be very uncommon that you will see it trade against or outside that zone. But again, if it does, good chance it's going to go to that next big level that you've mapped off, okay? So that is really kind of your approach each day in the market as you wake up, and you're kind of starting your day off to map off certain levels and zones where you know the market's going to get to, and you're going to see some significant trading around those zones. What we're going to go into next is some more theory, kind of understanding the buy low, sell high fashion, and helping you guys understand when a pattern that you see is more reliable, okay? Because just because a stock enters the low buying cycle doesn't necessarily mean that there's going to be a pattern that we're seeing to trade. A big thing that you're going to see in the day trading world or just in the investing world is you're going to say, look for patterns, look for bull flags, look for bullish pennants, patterns that occur, because those are going to lead to the move and they're going to be predictable moves. Well, there can be bull flags that appear at the wrong time that won't be reliable, and there will be bull flags that appear in the right time that will be reliable. So what we're going to do next is we're going to start looking into that and show you guys how we kind of use those patterns inside the overall strategy that we use, which is this channel high-low fashion. Okay, guys, so stay tuned for the next one. Again, some good stuff coming up.